Our guest today is Jason DeBono from NuView, and NuView is a strategic partner of Coastal's. And Jason, if you wouldn't mind, can you tell us a little bit about what NuView does?
Yeah, happy to. So NuView Trust Company is a third-party custodian. We serve a very similar role to a Schwab or a Fidelity, but the type of assets that we custody is outside the public market. So, we tend to kind of think of alternatives as being something so different and so unique, and really alternatives for the most part are just private. They're not publicly available. And so as a result, many custodians like Schwab and Fidelity simply choose not to hold those types of assets, no different than Subway chooses not to sell cheeseburgers, right? So our role is, we're a regulated entity. We hold and custody assets. We do all the same reporting to the IRS that Schwab and Fidelity and any other custodian does. So you're not really changing your IRA. You're just simply choosing to hold it at a custodian that'll let you park the investments into alternative assets.
There's nothing mysterious about a self-directed IRA. It was created along with 401ks. It's a 50-something-year-old law. And I think as far as the investment market, I'm not a professional investment advisor, but it's not just the different business model. It's the distribution channels for the public markets are so massive. It's like a fire hose, and alts don't really lend themselves to that massive flow of deals. So I think just historically, it's been harder to get access to alts. People don't understand them. The first thing you have to do is realize there's nothing crazy or mysterious about any of this. Explore it sooner rather than later. Get to understand it as best you can, get comfortable with it. And then the steps to actually get involved are really not that complicated. They're not scary.
A self-directed IRA and an alt custodian like NuView come in is that, we are not the place where you come to pick out your assets, right? You go to Schwab to pick out your stocks. For us, we don't have a menu of investments. The world is your oyster. So when you find these types of investments like a Coastal and you've done your due diligence and you realize, hey, I can invest into these institutional grade assets, right? As an individual investor, that's where NuView comes in to provide that custody needed for you to have access to those assets through your retirement funds.
Speaking of access, one of the things I wanted to talk about in conjunction with NuView is, what does it take to set up a self-directed IRA? Is this a difficult process? Who can do it? For people that are learning today about what an IRA is or what a self-directed IRA or a private custodian, what's the process of setting one up?
Super simple. It's no different than setting up an IRA at Schwab or Fidelity or Merrill. You can start your IRA with us. We have clients that open their account and make their first contribution. But because all these accounts are self-directed, typically most of our clients are coming to us with money already saved. They're coming to us with a former 401k plan. They've got, previous employers, and those 401k plans are just sitting there.
Because when you leave an old employer and you're no longer there, if you had a 401k plan, you could roll it over and take it anywhere you want to go at that point.
That's right.
Okay. Good
But
point.
you likely need somebody or should have somebody to manage that, right? You can't just take your 401k, roll it over, and just have this previous qualified plan. What are you going to do with it? Who's managing it? Somebody's managed it for you for years. And that's where somebody like a private custodian or NuView comes into play. Talk a little bit about the dynamic between Coastal and NuView and how we interact, how we engage.
The way we work with groups like Coastal is we're a resource, and we're both an educational resource. So, as you're engaging with clients or clients are engaging with you, there's a lot of questions that come up. And so certainly there should be lots of questions on the investment side. And you should never apologize for asking someone that you're going to invest with questions, right? In fact, if they can't answer your questions, that's a sign to run, right? They should be, and even if they're sweating a little bit, they should be tough questions. It's your money, right? Whether it's $1 or $1 million, it matters the same to you. So as you're interfacing with groups like Coastal, we're here to be that resource on a few fronts. A lot of times there's some tax decisions. They have qualified money. Should I convert to the Roth account? Those types of things. And so while we can't tell you what you should do because there's way too many personal things inside of that, we can give you what are the rules? What are the conditions? What do you have to think about? What is maybe some of the things you should go talk with your financial advisor or your tax professional about? The second thing that we do is we provide the custody and administration should someone want to invest with a group like Coastal. Right. So we're here to service the IRA. And the reason that you can't hold, or I shouldn't say can't, but generally don't hold alternatives at Schwab is they likely won't do it unless you've got a lot of zeros, right, behind your retirement account balance. And then secondarily, they really don't like to hold private investments. Not because they're bad, it's because they're manual. There's manual valuations. They don't just plug it into a system and the ticker symbol populates every day. And so it's a little different. We built our business around that. That is our business. So when someone says it's private, it's difficult, we say, well, it's difficult maybe if you're not set up for it, but for us, it's easy. So yeah, we're here to be that kind of neutral third party. We're here to be a custodian. We're here to give you education and information as it relates to things to consider, et cetera. And through that partnership and through that relationship with groups like Coastal, it gives you the ability to feel comfortable once you've done your due diligence that you not only have access to institutional grade assets, but you feel comfortable with where they're sitting, how they're custodied, how they're reported, that sort of thing.
I have a question. I generally don't know the answer to this question. Current Coastal clients, people that are currently investing with us that are making contributions personally out of their cash, should they consider opening a self-directed IRA and making investments through that?
So, there's a lot of ways to answer that question. The short answer is, of course. And the reason I say of course is you should have as many buckets of money as you can get. And I think Matt highlighted this with the location aspect, right? If you only have one, even if you got 10 million bucks and it's all sitting in one account, that's probably not good, right? You need money diversification and you need investment diversification. Those two things are mutually exclusive. Decision A is, where do I park my money, right? Traditional Roth, Simple SEP, ESA, HSA. Those are just retirement accounts, qualified plans. Then you've got personal buckets, right? You can put it into trust and all these different things. And so you've got this myriad of places to park money. And then step two is, what's the best investment opportunity inside each bucket? And I love the way that Matt framed this asset allocation is you should be looking and saying, hey, if Coastal is delivering the returns that I'm expecting, right, with the comfort that I'm expecting, should I do more of that? And then the question is, if the answer to that question is yes, I should do more, then should I do it from the same bucket? Or is there some benefits now, right, to put it into different buckets? And those are all part of this decision-making process.
And I think a follow-up to the conversation today may be talking about the different buckets and educating, of course, our current investors that are working with us and people that are considering investing with us about all those different buckets, really diving into it, lifting up the hood, understanding the mechanics of each of the different plans. That would be a great follow-up.
So one of the reasons that is hugely overlooked about one of the benefits of investing, if you take the investment conversation out of it and you take the tax conversation out of it, a qualified retirement, an ERISA-based plan, or something that becomes an IRA, there are creditor protection attributes to the money that's there. So if you own money in a cash account, commonly called a brokerage account or something like that, much more easily attachable by creditors. If you own something in an IRA or a 401k account, much harder to get after because it's under the Employee Retirement Act, ERISA. So if creditor protection is of concern to you, and some people's jobs or life is a lot more litigious than others. Maybe if you're an attorney or a doctor, physicians carry about creditor protection, right? Mm-hmm. So that could be a good for them. I was having a conversation with a client just the other day. Her dad ran a stop sign and hurt somebody, and a personal injury lawyer got involved, and he owned 3 duplexes and lost them all in the accident when he blew through the stoplight and hit somebody. So I'm not suggesting that he had the ability back in the day to buy those assets inside of an IRA account with a self-directed custodian. But if he would have had the choice and didn't make it, certainly years later, it negatively impacted his financial situation by not doing so.
Asset protection is critical. And even if he didn't have them in an IRA, he could have bought them through, maybe a land trust or other means. And so, you nailed it. And I guess, I don't know when this will actually air, but, O.J. Simpson comes to mind. We've referred to this as the O.J. Simpson rule, which is, O.J. Simpson was sued by the Goldmans, right? $30-something million, I think at the time. He filed bankruptcy, yet he still had his home in Palm Beach because it was Florida based and it could not be attached to the suit. And he had his NFL pension plan. And it was rumored he was getting like a couple $100,000 a month from his NFL pension plan, and it could not be touched. So if you think about the value of that, had he taken a lump sum out of that and just put it into his bank account, it would be gone. right? Now, obviously it's a heinous crime and that's a whole separate example, but it draws the parallel to anything can happen. And yeah, I mean, we're all human beings. I mean, heck, we're all guilty of picking up our cell phone while we're driving. And all it takes is look down for a second, run a stop sign, hit someone, and some overly aggressive attorney could come in and say, hey, we're going to attach everything that you have personally. So, that's like the third leg of the stool, which is in saving, investing, tax deferral, and then creditor protection.
Protect it. If you got it, protect it. Right?
Absolutely.
Knowing how to do it.